Thank you for joining us, ladies and gentlemen, to the University of Essex. My name is John Stenhouse and I'm the Business Support Manager on the University Enterprise Zone. We're running a series called Space to Grow, which is a series of webinars on investment readiness, where we prepare entrepreneurs and investors to invest into highly innovative businesses. The kind of support that we provide is totally free, and we provide not only these webinars, but also one-to-one support. So today's webinar is very much focused on the legal side, the documentation side that you need to go through in order to be prepared to talk to an investor. And for investors, the kind of documentation you really ought to have in front of you before you make an investment choice. So I'm going to now hand over to our guest presenter today, who has very kindly come along to present for us. And her name is Pasha Ahmed. And she is the funding strategist for SeedLegals, one of the most prominent organisations in the UK for generating investment into small enterprises. And they are a small enterprise themselves who've gone through rapid growth, very rapid growth, and have sought investment and have found it themselves. So I would now like to hand over to Pasha. Pasha, it is all yours.
Hi, thank you so much for the warm introduction. It's lovely to meet everyone here, and thank you so much for coming and joining us on the call. And yes, just to introduce myself there, my name is Pasha. If you want to have a look on LinkedIn, that's my full name. Do feel free to reach out, connect with me, or ask me any questions about anything I'll be discussing today. And of course, I'm here on behalf of SeedLegals. So if you haven't heard of SeedLegals, you might have been living under a rock, as we've been doing quite well over the past couple of years. So what we do is we help founders like yourselves prepare all of the legal documentation behind a variety of things, as well as provide a lot of support from the very beginning of your investment journey right through to your end. So we can help you with your fundraising documents. We can help you with, say, your advance assurance. If you want to issue option schemes to your employees, we can also help you with those things. And I believe in February alone, we helped raise 20 million on our platform as well. So we do help a lot of companies. And just as a stat there, we do I think around about 20% of all funding rounds in the UK, and that roughly translates to 20,000 companies on our platform alone, with about 10,000 investors who do use our platform for the legal documentation process. And today, I believe what we'll be speaking about is how to actually get your investor documents ready and to get yourself investment ready for your fundraising. And I believe one of the most, time-consuming things when it comes to fundraising is actually getting those investors on board, making sure that they're ready to sign those documents. So here I'm going to show you a little bit more about how to actually increase that investor urgency and get those signatures ready as soon as possible. So here are three main things that we can start to look at. First one is preparation. So if you fail to prepare to fail. I'm sure we've all heard of that one before. And I think in terms of making sure that you're raised ready, there are a few documents that you can keep in place and keep in check beforehand. One of the main ones being your pitch deck, of course, and we'll walk through actually what makes a fantastic pitch deck. But another thing as well that a lot of founders don't realize is if you come along with your pitch deck to an investor meeting, just think about how many they've probably seen beforehand before your meeting. So to make yourself stand out, another thing that you can come prepared to those investor conversations, to those initial conversations, is a term sheet. And I'm going to walk you through as well what makes an excellent term sheet and what makes you stand out from the rest of the pitch decks that your investor has seen there. And the second thing there is to make sure that you maximize your timeline. So of course, if you think about it, there are a lot of things that you need to prepare beforehand and at the same time as well. And I'm going to show you exactly what things you'd have to prioritize first and what things will come naturally later to make sure that all of your timelines align there and you are doing things in the correct order. And finally, closing your round with competence. So what does this actually mean? So what this means is making sure that you move through the entire process as quickly and efficiently as possible to understand which documents you would need. For example, your shareholders agreements, your SHA1 form for the filing of your shares, and to make those investors shareholders in your companies there. So moving on now, we'll have a look at what exactly a great pitch deck consumes, right? So there are a few things. I'm sure it's not brand new to anyone in this audience. So the first one is the problem that you are looking to solve. And this is the one that will get your investor really interested. So think about it. Do you understand the problem that's in the current market? How do you actually come to address this problem? If you can, as many statistics that you can find when it comes to your problem and proving product market fit, that's the best thing that you can incorporate in your pitch at this point. The second one is the actual product in itself. So whether you're a software as a service, whether you're a goods or a service, how you actually aim to resolve that problem, your user base, and exactly the tools that you'll be using there. And if you've got a working prototype already, or what stages and traction you have already come across at this point in time. The third one being the market there. So do enough people in the world have this problem? Are you actually solving something that has, I don't know, 1 million user base, or if it's, say, a much smaller user base in the tens of thousands there? And how exactly do you go about acquiring that customer base and really whetting the appetite within your customer base as well? And also, is there any proof of traction in that market? So have you got any competitors? Do you have, how does your product or service differ from your competitors? And this is where you can really bring in the numbers there. Have you got a prototype? Do you have any traction with that prototype as well? I think one of the main things that I think would get a lot of investor interest, especially if you're pre-revenue, is if you can generate a pre-launch sign-up list. So even if you haven't sold anything yet, even if it's not live, do you have a dedicated user base? Do you have a following? Do you have a loyal consumer base there? Which is exactly how you would showcase that traction. And yeah, so the team, are you a sole founder? Are you a co-founder? And naturally, with my experience as well, of course you can be a sole founder, but I think the more the merrier in terms of the co-founders. And this, exactly what do your co-founders do? What do you guys have experience in? Do you have a background in entrepreneurship? Do you have a background in, say, sales? Because I think notoriously a lot of really, really famous founders such as Sarah Blakely, Richard Branson, all started their careers in sales. So if you can prove that your background is relevant to what you're doing, or if you can maybe, just tweak it a little bit, it's about this kind of reminds me a bit of, say, going into an interview and having your CV prepared beforehand. You can well and truly land a role in an investment bank if the only work experience that you have is in McDonald's, if you can learn how to use your experience and really sell your experience in the right way. So the financials as well. So this is quite important. And even if you are pre-revenue at this stage, the financials will be quite important here. So do you have any revenue? Or again, how are you looking to go ahead and prove that you are going to be having revenue? How are you going to generate that? So maybe have a financial forecast there for either your 1-year plan or your 5-year plan. Maybe have a look at, say, total cost of goods sold, your total projected revenue, other things such as operating expenses. This will all come in here in financials. And I recommend maybe Googling, say, financial modeling forecast. It's really easy to find a template, and the formulas and everything will all be there for you. So all it will be inputting a set of numbers that you already have there. And there you go, you've got your financials generated. And finally, the operations, which I believe is probably going to be the make or break here. So the rest of these here, these are quite common. So this is what you'll always get in a pitch deck. But the operations, basically, how are you going to be making your investors' lives a bit easier? How are they going to be investing in you and making that a lot easier, their process there? So here, this is where your term sheet will come in. This is where, say, the legal documents will come in. How can you showcase to your investor there that you do have everything in order? You've got all of your ducks in a row in order to make sure that investing in your company is easy as 1, 2, 3. So getting investment ready. So what exactly is needed in the operations side of things? What legal documents are needed, right? So here we split it into 2 categories. So pre-deal, this will be when you're looking to get that, when you're generating that investor interest, and the deal in itself as well. So pre-deal, we do have a few things. So business plan or your pitch deck, which we've spoken about in the slide before. and your term sheet. So what exactly is your term sheet? We'll go ahead and speak with that in the next slide. But again, it's something that we at SeedLegals can help you prepare. We can align you with an investment expert to make sure that you're going in with the most founder-friendly terms. You're not going in there blind, because, you know, we're trying to change the landscape of entrepreneurship and investment. We're making sure that you're getting the best deals as a founder, and also making sure that your cap table and your company's house is all in order. The good thing as well, that's all part of our pre-funding round checks. So our team will go in and have a look through your company's house and cap table to make sure that all of the existing documentation, such as making sure that your current shareholders are all up in there as well. And of course, I would say, I think 60% of all angels in the UK would only invest in a company if they have their advance assurance, which means that they are either on the SEIS or EIS tax relief scheme. I believe it's about 50% if it's SEIS, so that's up to 150,000. For the EIS, it is reduced down to 30%, and that is more than 150,000 up to 1 million there. And that is something that you would get before you start receiving funds. I would say in the order of way of doing things is you'd open your round, get access to your term sheet, use that term sheet to generate investor interest. And as soon as you've done that, you can ask your investors, could you be the investor intent? Could you be the person that I can put the name down on the advance assurance? And also it'd be really good to get your founders agreements and your IP assignments all in place to make sure that you can showcase that you own your own warranties, and also you know exactly who's got what equity in your current team as well. And so when it comes to the deal in itself, that's also quite an interesting one. So this is when you've got your investors signed up, they've signed the term sheet, which isn't the legally binding document. That's just what you would use to negotiate terms. The shareholders agreement is the more concrete version of the term sheet. That's a more legally binding version of the term sheet as well. So this is what they would sign after they've signed the term sheet. The disclosure letter there is to make sure that you can provide the warranties that you own your own intellectual property. The resolutions, such as the shareholders resolutions and the board resolutions, is for your existing team members to sign and for your new investors to sign as well for the onboarding of new shareholders. And your articles of association are what needs to be updated on your company's house as well. So yes, let's have a look and see the best way to make sure from a timelines perspective, the fastest and easiest way to do your funding round. So everything that I've spoken about, it might seem a little bit overwhelming, but the good thing is we're here to help you. And I'm here to show you exactly how to actually get all of your ducks in a row, what things you would need to prioritize at this point in time before you start your investor conversations, to make sure that when it comes down to it, you're not waiting around, your investors aren't waiting around, you're ready to click go and start receiving those funds as soon as possible. So again, there are two elements to say your SEIS raise, which are by far the most time consuming. So the first one is waiting to hear back from HMRC when you've sent over your advance assurance documentation. So that can take up to 45 days. However, I believe it's about 20% of all advance assurance is done on our platform. Hence, HMRC is quite used to our systems. So that turnaround time has decreased from 45 to roughly about 2 weeks on our platform. And we say to prepare, for the worst case scenario, that it can take up to 45 days, which is why it's all important to get all of your other documents ready whilst you're waiting to hear back from HMRC. And the second most time consuming thing is that negotiation stage with your investors. So that's why it's even more important to get your term sheet ready and understand where what you're asking for, what kind of terms that you're looking for, and trying to get this all aligned before you hear back from HMRC. So again, you're ready to click go when you get started there. So let's have a look in more depth as to what your term sheet is. So this is a documentation, which again, I've mentioned, it summarizes all the key terms that the investment will take place on. So this is where the negotiations begin. It's the most important terms, and again, which is why it's all the more important that you get some advice from our legal team. Whether that be we actually recommend, say, investor pushback. If your investor comes to the table with their own terms, we can help you translate that onto the existing term sheet. on our legal framework. And also our advisors would tell you, say, if there's more leeway for you to say push back and say ask for a different set of terms, ones that are more founder friendly. And also the other terms that will be explored as well. So it could be that, yes, you want to open up your full funding round, but if you've got a few investors there that are looking to invest, say, straight away with an advanced subscription agreement, it's also known as a seed fast agreement, then they can do that there, or if they want to go ahead and wait for the full funding round. Okay, great. So the negotiations. Now, this is, I would say, probably the most important and most exciting part of your round. So you've got those investors in the door. You have started those negotiations. You signed that term sheet. You've got your advance assurance. Now it's actually ready and for you to start receiving those funds. So as soon as you've got the advance assurance, as soon as everything is signed there, that's when you'll receive the funds. And now it's moving on to the next steps there of the investment raising process. So again, the other documents there that need to be signed are your shareholders agreements, your articles of association, your board and shareholders resolution, your SHO1, and the share certificates there. So for any non-SEIS and non-EIS investors, you can let them know that the round has to be closed before they become shareholders. And that way, that kind of, again, increases that investor urgency for them to actually transfer those funds over to you so that you could get those funds into your account and you can close that round, allocate those shares to them, and that's when you can start using that money. However, if you say have 10 investors lined up in a round and about 5 of them are taking way too long for you to receive the funds, for you to close around, the other 5 are ready to give you that money, what you can do is, again, how I mentioned, you can issue a seed fast agreement to them. And that's what you can do before your round closes. And for the initial investors who are ready to give you that money, you can draft that agreement. It takes around 5 to 10 minutes. I can show you individually how to do that if you want to reach out to me, if you want to know a little bit more about that, if you've got those investors ready. And then you can start using those funds even before those investors become shareholders and before you close your round. So that's kind of like a get out of jail free card if you wanted to start using those funds straight away whilst you wait to hear back from the other investors in your round. So now it's really important to have a look and say at your investor timeline there, and how about how you actually go ahead and, you know, where to actually look through things and actually really making sure that everything is done in a chronological order and what things you should prioritize at this point in time. So say if you're starting completely afresh, you don't have any investors, you've not spoken to anyone yet, what do we need to do? So day one, I would say, is get your term sheet ready as soon as possible. And just to reiterate there, that's to make sure that you're getting in there with the most founder-friendly terms. You're not going into those investor conversations blind, and you're not going in there with just your pitch deck. Again, it's all about whetting that investor appetite and making sure that you're the one that they're ready to sign on to versus the other 10 pitch decks that they've probably seen before lunchtime. So that's what I would say is the immediate priority at this stage. And as soon as you've got that interest on the term sheet, as soon as you've got that signed, before you start receiving those funds, we will get ready in terms of the investment ready checks. So again, that's into your cap table, your company's house, to make sure that all of your houses are in order before, again, you start receiving those funds. And again, from say roundabout when we've finished those investment ready checks, when we've given you the go ahead, and after that term sheet is all signed, before you start receiving those funds, it is now important for you to send off the advance assurance form. Again, that's something that you can fill out either by yourself or on the platform. We recommend on the platform because it just streamlines. You can wait to hear back within, we would say, around about 2 weeks from HMRC. And as soon as you get the go ahead, you can start receiving those funds. And that's a guarantee that your investor can receive that tax relief back on their investment. And say between, I think, by the time you receive that advance assurance back, it can take a few weeks before you start receiving those funds. So again, this is now all up to you. Again, we're here to advise you whether it's worth waiting for you to close your round, or if we'd advise you to say sign some seed fast agreements or convertible loan notes for those initial investors who are looking to invest straight away, and for you to start using that capital before your round closes and before you allocate any shares there. So you've got two options there: either wait until all your investors come in or start using those funds straight away. And after all of those investments and investors have come in and you are ready to start using those funds all at the same time, this is when you would get the shareholders agreement signed. This is the more legally binding version of the term sheet. And it's really just to give everybody approval that, yes, this is going ahead and we are ready to get going. And yeah, so again, that's all you would need. And that's when you've got all of those documents signed, that's when you can go ahead and start the round closing process. And that's when you can really just, it's the most exciting stage as to when you've got that money in the bank, you can start using that money to build out your team, to build out your MVP, and to start generating that revenue there.
So effectively, the main thrust of the presentation is the need to get prepared up front. And we've referred quite a few businesses to SeedLegals over the past year on the basis that actually your team is very good at doing this and very cost effective as well. It might be worth, do you have any information to hand as to the actual costs involved in some of these things?
Absolutely, yeah. So the way that we work is we are the most founder friendly, the most efficient and cost effective way to get all of your legal documents in order. So just to give you a little bit of an idea, so we would charge you a percentage fee on how much you're looking to raise. So if you're looking to raise anywhere between £0 and £300,000, which is a standard seed round, we would charge you a 1% fee with a 1,990 minimum. But the good thing is, irrespective of how much you're looking to raise, the only thing you'd be paying upfront to get started with a seed round will be £600 plus VAT. And what that gives you access to is our entire team. So you'd get unlimited support from our team. We even work on the weekends because we're quite aware that, you know, some of you guys are probably busy during the week with your studies or with any of your 9-to-5 jobs, quote unquote, which is why we have a weekend team as well. So that's all included there in the price point with just that £600. That gives you access to all of those documents, so 1 through to 10, your term sheet, all the way to the SHA1 form, as well as our team and our pre-funding round checks. And then the remainder of that percentage fee is only billed when you've successfully raised that money and it's in your account. So again, from 0 to 300K, we charge you 1% fee with just the 600 up front. If you have a larger round, so anywhere between 300 and 1 mil, that gets reduced down to 0.5%, and it gets reduced down to a further 0.2% if it's above 1 million there. And for the advanced assurance there as well, so again, that's priced separately to the seed round. So if you wanted to do that on our platform, it will be that one-off fee of £300 plus VAT. And what that gives you is, instead of doing the entire process yourself, I'm not sure if anyone has had a go at it, it is quite hefty. You won't be doing it on yourself. So what you'd do is you'd fill out a questionnaire on our platform, you'd send over your pitch deck and your financials. We'll have a look through it. We'll get back to you within, say, 3 to 5 working days with any revisions that we recommend that you make. And we will also help you create that advanced assurance, and then you can send it off to HMRC.
Thank you, Pasha. No, thank you. And have you got any insight into the kind of investments that investors are interested in these days coming through your platform?
Yeah. So I think it really does vary because, you know, there's a lot of money out there to take really and to raise. And I think from my experience, I would say the most successful raises have been from those founders who can showcase that they've got solid traction, they've proven product market fit either via the MVP, via the sign up list, or say via I don't know, some kind of traction, or alternatively by showing that you have a solid team and you have a solid plan of action. And what I can see, I think through the pandemic, obviously a lot of e-commerce businesses have done really, really well. Anywhere that you can show ease of customer journey and ease of customer process, and that is, I think, the actual products and services that do really, really well these days.
We've certainly noticed that there are a lot of investors out there who are willing to invest. We ourselves have probably raised over 6 million on our platform in the last year, nowhere near as much as yours, but then we are only a small platform and we only started last year. So we're quite pleased with that progress, especially as we're dealing with seed enterprises, which are the most difficult to place in many respects, you know. But there was a question that came through, and I think I know the answer to this, but I'll throw it open anyway. Is there any difference in procedures for non-nationals? In other words, people who are here in the UK, but are here on visas?
To be honest, I think it doesn't really matter unless if your company is incorporated, say, in the UK or Ireland or France, we can help you with all of the legal documentation. And even if you're, say, as long as your company is incorporated in those regions there, that's all fine. Your investors can even be based in the US. We even have specific provisions for, say, US investors, or if, say, you wanted to be Sharia law compliant, if you're raising in the Middle East, we can help you state those specific terms and clauses on your term sheet or your seed-fast agreement. It just all depends on, say, where your company is based. So from my perspective, we have a variety of founders from all over the world, which have decided to go ahead with SeedLegals with their fundraising.
Because we've certainly noticed that we have a lot of alumni from our university, because we're an international university. Over 40% of staff and students are from overseas. We've had a lot of interest from overseas investors who are willing to invest in businesses that have come through the Essex programs. In other words, they quite like helping these businesses get off the ground, these fledgling businesses. You speak of rounds of funding. Should there be a timeline placed per round, or is agile funding a strategy?
That's a really, really good question there. So with us, we've seen that there's no pressure at all for you to close your rounds. However, of course, we say you shouldn't really start using your funds until the shares are allocated from a corporate governance perspective. And it's a really interesting phrase that you use there, as in agile funding, right? So again, that's where if you can remember me speaking about, say, the seed-fast agreements or your convertible loan note. So that is an agile funding strategy in itself. So that's something that you can use, say, straight away if you've already got investors lined up who are ready to, say, give 20, 30, 40, 50K to you, then you can start using those documents whilst your round is open, and you can start using that money irrespective of where of before, say, you have allocated shares to them. So that's the quick option for you to start receiving those funds. But yes, there's no timeline as to when you close, etc., etc. But obviously, the more earlier, the better. But the only thing that comes to mind as well is, say, if you have applied for your advance assurance and you've received it, and for your investments to be SEIS compatible, if you've issued your investors an agreement via the seed-fast agreement or the convertible loan note, they would need to say open and close your round within 6 months for that investment to be SEIS compatible and for you to receive that tax relief. And if it's coming in via a round, then it will need to be within 3 months of you using those funds for you to start closing that round, and for that money to be for them to claim back the tax relief there. So in essence, you could keep your round open, but if you want to start using that money, seed-fast agreement, you need to close your round within 6 months. And if it's in the actual round, it will need to be within 3 months there.
If you're not going for SEIS or EIS, you could theoretically keep an agile round going. In other words, keep continuous funding. That will possibly upset your chances of getting certain investors, because they probably wouldn't like that, because they'd like to know what percentage they're actually getting of your business in that respect. And I think it also gives the impression that you're just there to raise money, and that's all you want, is just the money. And of course, a lot of investors actually want to see some progress. They want to see some action before they put in further rounds or put in further fundings. Milestones achieved springs to mind. So if I was giving advice, and I never give advice, If I was giving advice, I would sort of err on the side of let's stick to milestones, let's stick to progress and monitor it that way. I'm a little uncomfortable with the agile funding route. Let's put it that way.
I understand that. I think
Yeah.
I think if I was a founder and if I was raising money, what I would do is try and prove as much traction as I can, and maybe perhaps bootstrap as much as I can before I even begin thinking about raising funds. So that all comes in with showing a skin in the game, and that comes in the traction slide of your pitch deck. So if you can showcase that using your own funds, however little or much that might be, that you've already, say, built the MVP, or you've already started getting a pre-launch list, you've done your logo, your trademark, that kind of thing. If you can showcase that, then it all the more looks better in your favor there. So I agree with you, John. It makes me a little uncomfortable, but the option's out there if the investors are ready.
We talked about investors from abroad, but when the business is abroad, of course, that's a different ball game. Do you actually deal with investments which aren't UK based? In other words, the companies are based elsewhere?
So unfortunately, at this point in time, we're not as international as we'd like to be for a variety of reasons. I think the reason why we're not in the US is because of the high litigation culture there. But for that reason, we have just expanded to France as well. So it's France, the UK, and Ireland, and we are working on incorporating more companies worldwide there. But in the meantime, just hang tight. But of course, if your investors are from a variety of countries, we can accommodate for that. Your company just needs to be incorporated in either the UK, Ireland, or France.
And of course, we would recommend that you incorporate your company in Essex so that we can support you even more. I think we will draw today to a close, but thank you so much.
Thanks very much for the kind words. And again, if you have any questions at all, if you'd want to jump on a quick chat about your fundraising strategy, then do feel free to reach out to me on LinkedIn or via email, and we can jump on a call.
Thank you. Thank you, and goodbye.